Many crypto investors dream about meme coins reaching extraordinary price levels, but when we analyze PEPE realistically, the mathematics and market structure show that $1 is simply impossible. PEPE's circulation sits at around 420 trillion tokens, an astronomically high number that instantly limits any chance of extreme price movement. If PEPE ever reached $1, its market cap would surpass $420 trillion, making it more valuable than the entire global economy combined. No amount of hype, community support, or viral momentum can overcome basic economic reality. The global financial system does not contain enough capital to sustain such a valuation, and even if billions flow into PEPE, it remains insignificant compared to the total supply. Unlike Bitcoin or Ethereum, PEPE has no fundamental utility driving long-term demand. Meme coins rely almost entirely on speculation, social media waves, and temporary enthusiasm. That creates short bursts of growth, but it cannot produce the type of sustainable demand required for trillion-dollar valuations. PEPE doesn't power a network, generate revenue, or solve a real-world problem. It exists as a symbol of internet culture, which is fun and energetic, but not financially scalable to the levels people imagine. Another major issue is that PEPE lacks meaningful supply burns. Without reducing supply, the massive token count stays intact and weighs down the price ceiling. Even if demand exploded, the pressure from so many tokens makes significant price increases mathematically difficult. And large whales who bought early would dump long before PEPE approached even a fraction of $1, creating enormous selling pressure. Exchanges would also face liquidity issues because paying out trillions in value is simply not possible. Regulatory vulnerability adds even more risk. Meme tokens are the most exposed category in crypto during policy crackdowns. Because PEPE is purely speculative, it would be among the first affected if stricter rules arrive, causing rapid declines. Market psychology also plays a huge role. Meme coins depend on constant attention to maintain price momentum. When attention fades, price collapses. There is no underlying use case to stabilize the market when sentiment turns negative. Historical behavior supports this. Every major meme coin experiences sharp pumps followed by steep crashes. Even Dogecoin, which received global exposure and support from Elon Musk, never reached $1 despite having a much smaller supply than PEPE. If Doge couldn't do it with peak hype, expecting PEPE to reach $1 is mathematically and historically unrealistic. Institutional investors also avoid ultra-high-risk meme assets. Without large inflows from institutional players, reaching multi-trillion-dollar valuations is impossible. Retail investors alone cannot push a meme asset anywhere near such heights. Even hitting 1/10 of a cent would require massive momentum and an extremely favorable market environment, yet that target is already challenging due to the huge supply. The truth is that PEPE can still offer opportunities through volatility and speculative cycles, and many traders enjoy riding those waves for quick profits. But expectations must match reality. Supply, liquidity, fundamental adoption, and global market limits all point in the same direction. The dream of PEPE reaching $1 is not compatible with financial logic or historical precedent. PEPE can grow, it can trend, it can pump with hype, but never to the extent of achieving a $1 price. That level would require breaking the boundaries of the global economy itself. Understanding this is essential for any investor trying to approach meme coins with a logical and informed mindset.